have to lower the prices that they charge their customers, and they won't be able to recover the cost of these investments in any reasonable return, or maybe there'll be a negative return. They'll be losing money. Now, there are a lot of people that think, oh, there's nothing to worry about because the U.S. companies are way ahead. We got like a 6-month lead on China, and that may be significant in some respects, but not in all respects. Yes, there's going to be some applications where a 6-month lead is significant, where the company that is 6 months behind, their AI won't do the job that you need. And so you have to pay up to use the more advanced model. But for a lot of applications, that won't be the case. I mean, if you're a businessman and you need AI to do a specific task for you, and there are Chinese companies where the AI is good enough to do that task as well as a U.S. company might do that particular task, that there's not a meaningful improvement in the results, but it's way cheaper, then that's the one you're going to choose. You're going to buy whatever AI you need to get the job done. You don't have to overpay. You don't have to have a model that is more than capable. It just has to be capable enough. And I think that could be a scare again that goes through the market that causes some significant declines in these stock prices that has broader implications for the overall market, because the market has been held up by these AI related stocks, these tech stocks, because there's a lot of negatives that have been ignored as investors have been crowding in to these smaller universe of stocks that are still going up. Yes, the overall market was down last week, but not a lot. The Dow was down 0.7%. That's not that much. S&P down 1.3%. The NASDAQ, despite all these big blow-ups, was only down 3.1% on the week. Year to date, NASDAQ's gain is now just 7.5%, which is about the same as the Dow. It was a big lead for a while, but it's still up. Even the high-flying Russell 2000 was down, but only 1.5%. It's still up 17% so far this year. And in fact, even though all these markets are down, they're still relatively close to their all-time record highs, despite the fact that you have this looming decline, significant decline in the stocks that have been leading the way. And there's been a lot of bad news too that came out this week. I'm going to get into some of that bad news after I do this break. But before I do that, I want to turn my attention to markets that were positive on the week. And that is gold. Gold and silver, precious metals, had a good week. Gold was up about 1%, nothing spectacular. But gold rose 1%, even though bond yields rose significantly. And even though oil prices rose significantly. Now, you might say, well, rising oil prices, should be good for gold because gold and oil should be correlated, but they haven't been correlated recently. Ever since the war broke out, the Iran war, there's been a divergence. It's been opposite. Gold and oil have gone in the opposite directions. And I've been saying that eventually that's going to change and oil and gold are going to move in the same direction, and that might be happening. Now, we didn't have a big move in gold this week. We did have a big move in oil, but gold didn't go down. And the fact that it didn't go down and in fact managed to rise, I think shows that that is happening. And that is very significant for precious metals investors. And look what happened. Silver was up 2.4% on the week, still down 20% on the year. Gold is barely down on the year. No, excuse me. It's down about 7% on the year. But considering the huge gain that both metals had in 2025, it's not that big a decline, but it's enough to create a buying opportunity. And in fact, a lot of people got scared that the war was going to be bearish for gold, that rising interest rates were going to be bearish for gold, and they are wrong. They're actually bullish for gold. And this week may be an indication that investors are figuring that out. In fact, if you look at what happened to the mining stocks, GDX was up 5.6% on the week. and GDXJ up 5.8%. These are decent moves where gold was only up 1%. A lot of leverage this week in the miners relative to the metal. I think that's a good sign of a bottom, that we're moving a lot higher. These stocks are still great buys. They're down on the year. The GDX is down 12.25% so far this year, and the GDXJ is down 14%. And another week where Bitcoin didn't really go anywhere. I mean, I know the week is not quite over yet because we still have the whole weekend, but I think as of when the markets closed on Friday, Bitcoin was down close to 1% on the week. I think it ended last week close to 65,000 or just below, and this week it barely managed to gain or close above 64,000. In fact, as I'm recording this on Saturday afternoon, Bitcoin is about 64,300 and change. So it's gained a little bit since the close in New York, but still an uneventful week for Bitcoin. Didn't move up with the precious metals, went down with the risk assets. Year to date, Bitcoin was down about 29%. As of the close on Friday, and about the same today still. That's a big drop, 29%. MicroStrategy, even worse, down 4.5%. Strategy. Again, they should have just called it micro based on where the stock is going rather than strategy, because they have none. But down 4.5% on the week, now down 42% year to date. Stretch managed a slight gain on the week of 0.4, but still down 13% on the year. The price is 86.88, meaning the current yield, because the coupon is 12%, the current yield is just under 14%, 13.8%. Investors don't believe in Bitcoin anymore, at least institutions. Apparently, according to Saylor, institution stepped up and bought some Stretch over the last week or two as retail sold. Obviously, retail sold for a loss, but this is still overwhelmingly a retail product. But I don't read anything bullish into this. The fact that institutions put their toe in the water, maybe it's a short-term trade, or maybe they're making some bearish bets where this is a hedge. Maybe they're shorting strategy and buying Stretch, or shorting Bitcoin and buying Stretch to get that yield and have a hedge. These are bearish bets if in fact they're being made. And I think Wall Street's rhetoric doesn't match their action. They're still trying to get customers into Bitcoin, but they have no interest in it themselves. Anyway, we got a quick commercial. We're going to take this break and we'll be right back. So don't go anywhere.
They say that every day your business is late to AI, you fall 2 days behind. But how do you keep up? The competition is only moving faster. Fortunately, there's NetSuite Next. You probably already know about NetSuite. It's the AI-powered business management suite that securely connects all of your data. It's a unified suite that brings your financials, inventory, commerce, HR, and CRM into a single source of truth trusted by over 43,000 customers. NetSuite Next is the next huge leap in how business gets done, because AI is built into everything you do. It automatically surfaces custom insights throughout your day. AI agents work alongside you to solve problems and handle routine work. And anytime you have a question about anything, ask it just like you're having a conversation with a colleague. NetSuite is customized for a wide range of industries, so it supports the way your business truly works. Whether your company earns millions or even hundreds of millions, it's time for NetSuite Next, where your business meets AI. If I had needed this product, it's what I would use. For the first time ever, you can try NetSuite Next for free. If your revenues are at least in the 7 figures, go to netsuite.ai/gold. Built for every industry, ready for every boardroom. netsuite.ai/gold.
As I alluded to before the break, the big moves really were in the bond market and in the oil market. Starting with oil, oil had a big week. It closed the week above $90 a barrel, $90.40. Oil prices continue to rise with the rhetoric in the Middle East, in particular related to Iran and the Strait and everything that's going on there. Oil prices now are up 30% in the month of July. And we got another week left to go. We could hit 100 by the end of the month. We'll see.